One ETF that's had a rough couple weeks is TSLY, down over 12% in the past month. And unfortunately, this might be a sign of more bad things to come. Tesla, the company, is also down 12% in the past month. Of course, TSLY doesn't actually own Tesla, but rather they synthetically own them using call and put options. Yieldmax is very transparent on its website. The fund will be volatile and will not track the overall market like many traditional ETFs. But the volatility is what drives those juicy TSLY dividends, which still has a very juicy annualized rate of nearly 60%. A 60% dividend yield is insane, but like most things in life, if it's too good to be true, it probably is. Just like Yieldmax points out on its website, the fund involves a high degree of risk and caps potential gains on Tesla stock if the equity increases in value due to the call options trading it deploys. Just as important, the fund is subject to all potential losses if Tesla goes down in value. And that might not be offset by the income received by the fund, thus it might not be suitable for all investors. Let's try to break this down a little bit more to highlight how risky this investing strategy is. Imagine Tesla just had an amazing earnings report, and the stock price goes up 15% in a short period of time, which is actually pretty common for Tesla since it's a relatively newer growth company that has already revolutionized the world with its EV cars and clearly will continue to have an impact on the future as electric vehicles continue to explode in popularity. However, because we are earning juicy premiums from the call option, that means we're giving away the right to Tesla shares at a predetermined price on a predetermined date if the stock price gets reached. According to their prospectus, which I recommend that all investors actually read, the strike price they generally use is 5 to 15% out of the money, which they trade at 1 month or less. So yes, we will get exposure to some of that nice upside, but not all of it, and this becomes a serious problem when Tesla takes a nosedive, such as in their most recent earnings as an example. Tesla reported bad news and the stock fell 14% in less than 5 days. TSLY is exposed to all this downside. There is no crash protection. So TSLY gets capped all the times that Tesla goes up, but goes down with Tesla all the times that Tesla goes down. This can cause some serious NAV erosion, which we can see when TSLY launched in November of 2022. They were trading at $20.44, reaching a peak the following month at $21.76. But nearly a year later, they have lost nearly half their value. And there's a chance TSLY can never recover in share price. The optimal scenario for TSLY would be if Tesla went up in value slowly over time, where the growth wasn't stunted by the call options. But those times when Tesla goes up rapidly in a short period of time is really gonna hurt TSLY. And this has serious consequences on the dividends, as this means there's less money the fund has to do options trading with. So those early days of TSLY, they had dividends around $1, but they have definitely fell in recent months closer to 58 cents a share. That's a huge reduction in dividends. Plus the variable nature of not having a clear idea of what those dividends might be is quite difficult to plan expenses with. Yeah, that car payment is $500. Well, I just better hope that TSLY just happened to have a good month this past month. Honestly, income ETFs like this, they always feel like more gambling or speculation than actual investing. And on top of that, they also have quite the expensive expense ratio of 99 basis points. And that does cover all the options trading for us. Anything that's actively managed and invested is going to be more expensive. One other thing to keep in mind is that taxes are also going to be at those unfavorable rates. A lot of people in here telling me how they plan on reaching financial freedom and retirement with income ETFs. At this point, I'd have more faith in Social Security than this investing strategy. There's also the risk that Tesla, the company, just doesn't do well in the future. People seem to pencil in this company as they're gonna always dominate the EV market for years to come. Tesla's most recent earnings call was not good. Gross profit, revenues were all down. Tesla has prided itself on high margins, yet has just an 8% gross margin. That is nothing to be bragging about when that's less than Toyota and other big car manufacturers. Tesla has to keep cutting its prices to be able to sell cars. That's not a winning strategy. There's also huge concerns about its self-driving claims, with Elon Musk continuing to dodge any questions about it. I remember when making videos about this in 2019, when Elon Musk said that autonomous cars would be here in 2020. Well, almost 4 years later, last time I checked, I can't watch YouTube and eat Taco Bell while I drive just yet. At least not legally. Even with dividends reinvested, TSLY has significantly underperformed Tesla in total returns since its inception, having returned negative 1.88% compared to Tesla, which is up almost 20% in the same time period. There's no shortcuts to wealth. If getting 80% returns were so easy, why isn't everybody doing it? Why isn't this national news? Why aren't smart investors like Warren Buffett putting everything into these funds? Maybe they know something you don't, and that's when it's too incredible to believe it's often not credible. Now, there were some investors who reported a delay in getting dividend payments from TSLY. This really didn't have anything to do with Yieldmax, as they said it was an administrative issue with one of their service providers that processes dividend payments. People on the Dividend Discord report the same thing with other companies. It's just a routine thing if you ask me. Just a nuisance you have to deal with from time to time. Guys, if you aren't on the Dividend Discord yet, what are you doing? This is where dividend investors come to talk about how we're gonna grow that wealth together. Here's a video where I talk about how much in dividends I made last month. Join the Patreon to see all my weekly stock trades, get access to my full $155,000 portfolio, and for the year, guys, I'm still beating the market. Let's grow rich together. Let me know what you think of TSLY in the comments below, and I'll catch you on the next one.